In today's video, I'm going to show you one of the best ways of determining where the next pullback will end in a very simple way. We are going to use a trading model based on the Anchored VWAP, but we're going to make a modification on its anchoring approach. The trading model consists in anchoring the VWAP in swing points to catch the next pullback, but changing the source of calculation depending on the type of swing point. If the VWAP is anchored on a swing low, we're going to change its calculation to low. And if it's grounded on a swing high, we're going to change its calculation to high. That means that the VWAP line will always begin from the absolute origin of the movement. This simple trick usually provides very interesting trade opportunities despite its simplicity. Let's observe a few examples of this model in different markets and timeframes. In this first example, we'll observe some trade opportunities in the S&P 500 1-hour time frame. The model starts with the selection of one swing point in order to ground the VWAP and then forecast the next important swing point. In this chart, we can see that right now there is a non-failure swing, or what younger people are calling market structure shift nowadays. That means a higher high followed by a lower low, which represents a break of structure. The reason we care about this is that a non-failure swing, expanding pivot, market structure shift, or whatever you want to call it, represents the possibility of a trend in the opposite direction. In this case, we see that price was going up, and now the non-failure swing is indicating a reversal to the downside. This is a sign that the highest high in the chart forms a swing high that is a good candidate for the anchoring of the modified VWAP. To change the source of calculation for the VWAP, you go to Settings, then Inputs, and then change the source to high or low depending on which type of swing point you're dealing with. The standard for the VWAP is the typical price, which is high plus low plus close divided by 3. Since we're dealing with a swing high, we change the source of calculation to high. Notice how the VWAP line starts at the absolute origin of the movement. From now on, we have a reliable dynamic resistance that can, in many cases, indicate where the next pullback will end, which is of course useful to any trader. If we advance a few candles into the future, we see that eventually price action meets the anchored VWAP line. This is a signal that the current pullback might have ended, so now the trader should pay attention to the subtle signs in price action that will confirm that notion. If you have a higher risk tolerance, you can open a short position at the VWAP line, but it's wise to wait for some sort of confirmation. Just keep in mind that waiting for a confirmation usually comes with the cost of decreasing entry precision. In the very next candle, we obtained the confirmation. Price clearly reacted to the modified anchored VWAP line. Students of my premium courses will also quickly identify that this bearish candle creates what is called a dynamic frequency breakout to the downside. If you watched another video of mine where I teach how to draw mechanical supply and demand zones in alignment with non-failure swings to build a trading model, you know that price is also reacting to a very clear supply zone that comes out of the swing that was used to plot the anchored VWAP. Moving a few candles into the future again, we see that this was indeed the end of the pullback, and now price has broken structure to the downside. In this trading model, once an anchored VWAP has successfully detected the next pullback, it's time to remove it from the chart and add a new anchored VWAP to the new significant swing point, although there are exceptions. The reason for this is the attenuation effect built in anchored indicators like this. You can learn more about that in my advanced order flow course. Let's remove everything from the chart for clarity and move the anchored VWAP to the new swing point that the previous one detected. What you need to do now is simple. Wait for price action to return to the VWAP and see if it reacts in the way that you expect. A few candles later, we see that price almost touches the VWAP and continues going down with a candle that has a big upper shadow, demonstrating bearish pressure. Price eventually returns successfully to the VWAP, and now it creates what the students of my courses can easily identify as a bearish fractal bar. The fractal bar is also reacting to an inward frequency line, as you can see here. Several candles later, we can observe that price hasn't really continued to the downside. Instead, it was trapped in a consolidation. However, the anchored VWAP line still remains valid, and the inward frequency line also does. The key to detect the next move, as usual, is in price action itself. Every time price reaches the VWAP resistance, it shows some strength to the downside. On top of that, we are clearly in a downtrend since the highest high in the chart. A few candles later, we can see that the VWAP resistance indeed held price action successfully. Now you may be wondering that there are other prominent swing highs along the way, and if you had chosen those, you would not reach the same conclusions we just reached, but that's not the case. We can change the anchoring of the VWAP to other swing highs and the signal will remain the same. This is one example of this, and this is another. Both these swing highs produced a VWAP line that pointed to the same area in the chart. Following our model, we can leave the VWAP anchored in the less significant swing high. The next step is very clear once again. You should wait for price to return to the VWAP and see the reaction. Later, we can see once again price returning to the updated anchored VWAP line. This is a textbook situation and a very clear setup if you understand a few things about order flow. We already know that our model signals a potential bearish movement from now on, but beyond that, notice how price has returned to the price region where the last consolidation occurred. This is price testing the last area of fair value. One way of determining that area more objectively is with the volume profile. If we plot the profile from the highest high in the chart to the lowest low, we get this. Price is pretty much touching the VWAP and is within the value area of the volume profile, reacting to the point of control, which is the price level with the highest volume inside the value area. In the next candles, you can see the power of this combination. Price moved to the downside once again with a lot of power. These are very good examples of how simple order flow tools and good old price action can point to high quality trade setups, even though order flow and price action go way beyond this. The next example we'll see is in the pound yen 10-minute chart. Here we have a similar situation compared to the last example, but now the non-failure swing is pointing to the upside, meaning a lower low followed by a higher high. Looking at the available price action here, it's pretty obvious to choose which swing to anchor the VWAP. It's the lowest low in the chart that happened with the long lower tail implying buying pressure. Notice how the VWAP comes out of the absolute origin of the swing low. That's what we're after in this model. A few candles later, we see price quickly returning to the VWAP and creating an obvious bullish reaction. This is both signal and confirmation for this model. We have price returning to the modified anchored VWAP and then producing a reaction that respects the boundary of the line precisely. In this next chart, we can see the result. Price went up immediately after the touch of the modified anchored VWAP. This VWAP that we are using is a major one, meaning that it's aiming to capture larger swings. But if you wanted to catch the smaller swings that occurred in the bullish movement, you could do that in the same way. For example, in this chart, you can see an example where the VWAP is plotted in a minor swing low in order to catch the next minor pullback. Anchoring the VWAP in the original swing low and advancing price action a few candles into the future, we can see that price action comes back to the line and produces a bullish reaction once again. However, notice also that price just broke structure to the downside, which is not very good news for the current uptrend. Notice also that the break of structure is correlating with a minor demand zone. This is obviously a contradictory signal because many traders consider a break of structure to the downside a bearish signal, and price returning to a previous demand zone a bullish signal. The bigger question here is not related to the trend bias exactly, but the location of opportunities. What I mean by this is that even if this break of structure to the downside ends up in a bearish trend, its location suggests a temporary exhaustion of energy from the part of sellers. We can see that more vividly by plotting a pitchfork. The break of structure happens very near the median line. Price reaching the median line is a sign of exhaustion of energy, but that's a story for another day. Younger traders will look at this and say that this is liquidity inducement, which in this case would be a bullish signal. The break of structure is serving the purpose of creating a burst of liquidity so that larger players can get long more easily. This idea gets stronger if you perceive that the first candle that breaks the previous low also produces a longer lower shadow that quickly closes above the previous low. It's not uncommon to see this type of pattern in a trend continuation. We have evidence for the upside with the demand zone in the VWAP line and we have evidence for the downside with the break of structure. However, the location of price action favors a bullish trade, even if the downside wins eventually, and that's a critical point. By advancing price action, we can see how the story ends. Price breaks out of the pitchfork and tests it on the outside at the same time that it touches the demand zone and the VWAP line again. Notice how price enters a longer consolidation due to this indecision about what the right trend bias is. The point here is that the modified anchored VWAP model would yield a very good, almost perfect trade location, and it could have been very easily identified ahead of time. Just to piss some people off, you also have one last chance of getting long when price breaks a contracting triangle to the upside. One final detail here is that the VWAP line continues to produce reactions later on, as we can see here with the massive lower shadow on this candle. That's not just a VWAP in action, of course. Here we can see that price action comes back to the value area in point of control of the volume profile of this whole uptrend. This is an example of how order flow tools can work even in markets like Forex. The reason is because tick volume is indeed a good proxy for real volume when we are interested in the statistical aggregates of order flow tools, such as value area, for example. In this third and final example, we're going to take a look at silver futures for our time frame. This modified anchored VWAP model works particularly well in markets that have sustainable and clear trends, which is the case of silver. In this chart, we can see a nice uptrend, and by using the model we're talking about, you can eliminate a lot of the guesswork in determining the next pullback location. For example, here we can see that this VWAP successfully pointed to the next pullback. By updating the VWAP to the predicted pullback, we can forecast the next one like so. We can repeat the process a few times, and you see that in many instances, the pullback could have been almost perfectly predicted using just one line. This is a 4-hour chart, so each successful touch of the VWAP represents a great opportunity. I could go on here and give many more examples with different nuances, but this is enough to present the model so you can mess around with it. If you like this presentation and wish to go deeper into advanced trading tools and methods, check out my premium courses. You can find more information in my website fractalflowpro.com, or you can send me an email at support@fractalflowpro.com. If you enjoyed this video, please help support the channel by clicking the like button, subscribing to the channel, activating all notifications, leaving your feedback below in the comment section, and sharing this video with your trading community. Thank you very much for watching, and I hope to see you in the next video. Take care.